everyone, I'm Stephen Kalayjian, and welcome to Back to the Futures. I hope everyone had a great Christmas. And first time, I believe, in 4 years, Hanukkah and Christmas landed on the same day. So if you're still celebrating Hanukkah, happy Hanukkah, and I hope everybody had a Merry Christmas. All right. So remember I said when we first started the show, many months ago, I said, if you can master the art of divergences, you have mastered the art of trading, okay? And when you master the art of trading, when you master the art of trading, you then can really be in a situation, okay, of the when you master the art of trading and using divergences, you get buy and sell divergences. So let me just show you, first of all, let's look at the spiders here on the 15. So coming into today, right, a couple of people said, hey, I'm looking to short the market. I'm like, I wouldn't do that, right? I got the bigger time frames, the 30 and the 60-minute time frames on the spiders and the Qs in phenomenal buy ranges, right? Okay, so when you see that, we're coming in here, you can see right here on the push down this morning, we traded down. We were down like 30 handles on the S&P, 30 points. But the 15, 30, and the 60-minute time frames still did not go into sell mode. Did not get into any type of a sell mode. All right. Now, when you see the 15 reverse up here, all right, and then the 5-minute time frame reverse to buy, this was a nice little pullback here on the 3-minute. Now, one of the things, and then you can see the pullback here on the 5-minute, and here's the second pullback on the 5. But look at this great short right here. When the 15-minute time frames, not only here, okay, but also here, all right, they got into the 60, 70, and then they ran up to, well, this was a good short. This dropped a little bit. But look at the second great push up here. Okay, if you see the second great push up, you can see, okay, you can see the short. Let me just get this here. You can see the push up right here, and you're making new highs, but the MACDs did not confirm. Look at the negative MACDs on the 15. But watch this, though. Even more so, okay? Even more so, if you see the 30-minute time frames here, this is the 30-minute. I don't know why this is looking a little different. Well, my 30-minute, okay. So you see here, you're making new highs, and the MACDs are non-confirming on the spiders. I don't know why that's not working there well. Okay. So there goes Tesla, dropping 1. Okay. But if you look here, you can, so let's maybe look at the Qs really quickly here. The Qs on the, okay, here it is. This is the 5-minute. They just dropped here. Okay. Nice little pattern there. All right. Let's just see here. Now they're dropping. Okay. All right. You got the MACD's negative. 5-minute time frame. S&P's just got cabooshed here. There goes Tesla dropping here too. All right. And if you look here, you can see that the pullbacks here were rather sharp, and then they pushed up. Now, I want to go to the daily time frame on this. Okay, if I can just go to the dailies quickly here. Wow, look at these stocks drop here rather sharply. Okay, good. Okay. All right. Let's go to the daily. Okay, you see this pattern here. You got oversold, and we rallied about 200 points off the S&Ps here. Okay, we rallied about 200 points off the S&Ps. Now, when you have these type of patterns, okay, when you have these type of patterns, all right, one of the things that's really important, all right, is that when you see this bear, this is a monster bear flag here. This is a monster bear flag, all right? And one of the things that I always tell people all the time, all right, is that when you're trading the markets, you want to be able to be in a situation that gives you the best ability, meaning the ability to trade the market effectively and efficiently, right? And so looking at the bigger time frames, I knew we were deeply oversold. The algorithm reversed to sell, but the weekly is still bullish, right? All right. So we rallied 200, but this is a monster bear flag. And I said by Monday we will get that oversold condition, and we got it. Okay, and we got it. Boy, oh boy, did we get it. Okay. Now, what we really need to focus on, okay, what we need to focus on overall, okay, is when you're playing the market and when you're trading the market, you want to be able to be in a situation, okay, that when you're trading, you want to be able to identify these divergence patterns, okay? And when you have these divergence patterns, like we saw when the S&Ps were trading above the '06 level, I'm like, are you kidding me? These MACDs are non-confirming on the underlying ETFs and the spiders and the Qs. Or based upon my work, looking at the 30-minute time frames, they're nowhere near looking like they're going to reverse to the buy. I mean, they're in buy mode, but when you have negative MACDs above my pivot line, you're making new highs and you're overbought into the negative MACDs. Where are they going to go? On top of the 15 and the 30-minute lining up. So these patterns to me are tremendous, right? And again, whether you're trading the futures, and I always say this, during the US session, you need to look at the underlying ETFs, because I would never have picked up that sell divergence using the continuous contracts, all right? I want to show you the GLDs here, if I can show you the GLDs really quick here, all right? Now, the GLDs, here's a 30-minute reversing to buy. Look at this monster bull flag. Gold rallied $7 on this, right? So the GLDs reversed to buy. And then if you switch this to the 15-minute time frame right here, okay, the not the 15-second, stupid, but I just do, sorry. 15-minute, sorry, here, and I'll switch this here, and I'll switch this one here to the 30-minute, okay. Okay. Oh, let me see what's going on here. I need some help here. Why this thing is not allowing me to go to the time frame I need. Okay. Yeah, I don't know. Okay. Okay. You see, this is the 15-minute time frame on the GLDs. You see the oversold condition here. And this oversold condition really was a phenomenal pattern. A phenomenal pattern in the sense that when you're trading, you can see how the 15-minute time frame reversed to sell, okay? But it also set up the buy on the 30 and the 60 minutes. So gold, gold was trading around the 46 and a half, and it shot up $8. Again, you would never have been able to see this using the continuous contract. And that's all I want, basically, that to me is really important there, okay? That to me is really, really important, okay? All right. What else? Okay. And that's gold. And now oil is still negative on the 15 and the 30 on the US sills, but the 60 is still bullish. So we have to see right now, I'd be looking for a short in oil on the first bounce there. Okay. What else? Looking out here, let's see here. We have the Russell. Look at the IWMs today. If you're trading the RTYs, look at the 15-minute time frame. Look at this beautiful pattern. We got the big buy reversal here coming in, and then we had some nice pullbacks on the 5-minute, right? But look at this beautiful pullback right here on the 15-minute time frame. All right. Now, this beautiful pullback on the 15 gave us the ability, to trade the stock in such a way, all right, that we were able to buy it based upon the oversold condition. And look where I get my ranges from, basically using the 10-bar weighted moving average. Oh, wow, look at this Tesla drop. Wow. Okay. And And what's really important with this pattern is that when you're trading, you want to be able to see, and as I do, I have the 15, the 5 and the 15, the 30 and the 60-minute time frames up, right? So it's important that when you have everything aligned, you want to be able to have, you want to swim with the tide, not against the tide. So you see we got this big buy here, and if I switch to the 30-minute time frame here on the Russell, and again, this is a great way to use the software if you're trading the underlying the continuous contracts, right? Here's the 1 hour. So we already know that the 15, the 30, and the 60-minute time frames are in buy mode. So what do you look to do? You look to buy the first pullback on the 5-minute time frame. All right, that's what you look to do there. Okay, that's what you look to do. All right. Let's see here. Let's see here. 829.20. Okay. So again, very quiet. It's very it's almost to the point where the markets are really just, we're just hovering here. All right. And what's important, okay, what's really important, all right, is the understanding that when you're trading the markets here, all right, you want to be able to use the multiple time frames. Okay. If you see I'm a little distracted right now, it's because I'm just looking at different patterns, and I'm just looking on different, I want to make sure the data is right. I had nothing but internet problems here today. So again, we're very, very quiet. We're slow here right now. And I think tomorrow is going to be dead. But what's important is that when we're trading, you want to be able to have the multiple time frames. Somebody tried to knock me a little while ago and say, he uses old indicators and this and that, and indicators lag. You're right. Indicators do lag. But I don't care about the indicators. I care about what the indicators tell me. Price leads, indicators lag, but the indicators that I have set up tell me what I think is going to happen next. Okay. So for example, I know we're supposed to be talking futures here, but I had a great short in Tesla just now. It just dropped 3 points on a pattern that repeats itself over and over again. All right. So again, whether you're trading stocks or whether you're trading futures, again, it's important with my 41 plus years of experience, you want to be able to use the underlying ETFs during the US session, combined using the with the continuous contracts. Now, beautiful pattern on the 30-year bonds just happened around 12:45. The 30-year bonds just ran 13:30 seconds. It's a phenomenal pattern. Now I just got a buy on the TLTs, which is the underlying ETF on the 20-year, but I use that instrument. And then what happens now? Boom. Guess what happens now? Now what we do is we wait patiently, right? We wait patiently for a pullback on the 30-year bonds if you're trading the bond futures. So now that I got the correlation on the 30-year, okay, the TLTs, the 20-year ETF with the 30-year bond, I'll then look to buy the first pullback on the 5-minute time frame. So it's really important, to trade the markets in such an efficient way. And when it's this slow like this, you want to pick and choose your spots, right? You don't want to be all over the place. You want to be able to be in a situation, okay, that gives you your best results. And your best results are going to come from being consistent, using multiple time frames, and being able to trade the market effectively in a way that you'll be able to be consistent each and every day. And that's really super important. Okay. Does anybody have any questions at all? Anybody have any questions? Okay. What I want to say is that, going into the new year, people should, everybody sets goals for themselves, right? And whether it's a goal, if you're trading the market short-term, intermediate, or long-term, it does not make a difference, right? But what makes a difference, truthfully, okay, what makes a difference is that when you're in the market and you're trading, be consistent on the same asset. If you're trading S&P futures, stick with the S&Ps. If you're trading NASDAQ, then look at the underlying ETFs, the spiders, and the QQQs or the SQQQs. I mean, beautiful pattern on the SQQQs, beautiful short on the NASDAQ, just dropped about 20. S&Ps on that one pattern just dropped roughly about, I don't know, they just dropped about 7 to 8 on this pattern. But if you could try to make anywhere from 5 to 10, 5 to 15 points on the S&P, if you could try to make anywhere from 20 to 40 points on the NASDAQ every single day, in my opinion, you're way ahead of the game. You're way, 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 way ahead of the game. Okay? Way ahead of the game. Again, if anybody has any questions, please feel free to ask away here. Okay, so, all right. What else is going on here? Okay. Let's see here. Okay, so what we really need to do here, S&P futures just rallied 3 here. The 15s are starting to turn up. So if the S&Ps get down, I would look to buy them. I always do like a 5-handle range, 87.5 to 92.5. I don't think we're going to get it. Just ran 4 just now here. Okay, I just ran 4. We may get one more, maybe one more push down here. Maybe one more push down here. Okay. Let's see what else is going on here. Looking at the Dow futures, the Dow futures had the identical same pattern. The Dow futures had the identical same pattern, okay, as the diamonds, obviously, but the Russell and the diamonds seem like the Russell is actually up $1.60. So that between the 4 indices, the Russell looks like it's the strongest, the Dow second, the S&P third, or the neck and neck with the NASDAQ here. Beautiful short here on Tesla just now. So that's dragging the should be dragging the market down here a bit. What else here?
We have a few questions.
Oh, what's the question? Let's see. Hey, at what time are the markets more volatile, Steve? Do you think it's all day? Yeah, hey, that's a great question, actually. Okay. That's a really great question. You know, I like to say that because of the holidays here, okay, that I think that, you know, it's once we're out of this holiday and beginning of the year, boom, bonds, new highs. I think what you're going to start seeing, in my personal opinion, okay, is from 9:30 to 10, it's very volatile. Now, if you have a red day, like an economic calendar day, like where you have unemployment, GDP, PPI, CPI number, then, you know, anything can happen. Anything can happen there, okay? But what you want to do is know your economic calendar, right? There's at a 22 business days in a month, there are 7 red days. Durable goods, new home sales, PPI, CPI, GDP, employment, and I think there was one more. S&Ps just ran 5 here. So what you want, okay, is to understand what's happening for the day. That's one, right? Wow, the spiders. Okay, missed that one. What you want is the understanding of the time frame, right? Knowing the markets, and you know, as far as you know, where we're you know, what you're looking at as far as the economic calendar is concerned. Then you want to be able to identify the same stocks, right, that you like to trade every single day. But from 9:30 to 4, like today, I'll give you an example. Okay, so and I'm not talking about just futures here, but just on the opening here today, okay, there were 5 stocks that I knew had monster sell divergences: Coinbase, PLTR, Nvidia, Avago, and AMD, right? Based upon the way I use my software, okay? And when you get these big sell divergences, it also caused the market to drop, and that's what the S&Ps did right after the opening. But if you're looking at the market and then you say to yourself, right, you say, well, from 9:30 to 10, in my opinion, is the best half hour of the day, right? And then you get some crazy 3:30 to 4s, right? I think on what was it, on Monday and Tuesday, there was 900 billion to buy, 900 million to buy on the S&Ps on Tuesday, and 1.1 billion or 1.6 billion to buy on the Bell on Monday. And the S&Ps on both days ran 15 to 20 handles, 15 to 20 points up. NASDAQ ran about 80 on both, 60 to 80 on both days. Now, that doesn't happen all the time, okay? That doesn't happen all the time. But when it does happen, okay, when it does happen, get ready, because I'm telling you now that the first 30 minutes of the day is very active. And then when you start getting correlations, right, especially on the opening, after we got the push down, it set up the buy in the 30-minute. Now we're getting looks like another, I'm looking for one more pullback here, okay? Because if we do get this one last pullback, okay, I think that we're going to be in a good spot to, set up longs again here on the 30-minute time frames. The 60-minute MACDs are still positive, very strong here. I don't like the fact that there's no buying pressure, very little, if any, on the 60-minute time frame. But what you're seeing here is that if we do get a push down here, all right, on the S&Ps, I'd be a buyer. So again, like I said, this morning, people are like, oh, I'm going to short the market, I'm going to short the market. I'm like, we're not ready to be shorted based upon my work. We're not ready to be shorted based upon the work. And I just want people to understand that, because it's really important that, for all of you, when you're trading, look at the multiple time frames. Get a good understanding. All the numbers are there. You can see the numbers on the right. You can see where the algorithm flips negative, right, or positive. And I think what's really important, is that each and every one of you can take this to the next level and be consistent each and every day by learning from me, by asking questions, by watching the patterns. When you hit your goal, you stop, you watch, then you look at the market in such a way that will give you the best ability to go forward. All right. I hope I answered your question. So the first 30 minutes to me are very powerful, especially if there's an economic number coming out. And let's just say they gap up, and then we'll just wait for pullbacks. That's how I look at it in the world that I come from here. What else? Does anybody have any other questions here? Anybody?
There's another one.
Oh, okay, great. I hope I answered that question. But most of the time, Urban, hey, can you please guide me on a straddle adjustment? Okay, we're talking futures here. I don't really do straddles, so I'm not the person to ask for that. So I'm not going to tell you something that I don't know. Okay. Normally, outright trading futures is the way to do it. For me, I don't believe in getting into using a lot of option strategies. When I trade and do options, it's also primarily selling premium. Okay, and I like selling premium on underlying assets that had some really big moves here. And I think that's something that is a strategy, but it's a risky strategy, and you have to have the tolerance if you're short calls that you could be called away per se. Okay. But again, it's not something that I do, and I'm not going to blurt something out for the sake of blurting something out or looking it up. Again, this is a futures. We're talking back to the futures. We're talking futures here. So I just want all of you to understand that any questions regarding futures or ETFs or my methodology, I'm more than happy to go over with all of you. Okay. What else? Does anybody have any other questions? As far as the software is concerned, I spent nearly 10 years of my life building it. I use it each and every day. It gives me the ability to have an edge in the market, to identify patterns, identify market direction, identify the patterns, and identify using multiple time frames. Like for example, I'm looking at the Russell here on the 30 and the 60-minute time frame, and for me, I'm saying to myself, okay, that pullback that happened at about 115 on the 15-minute time frame, the Russell went from 224.50 up to 225.50. Just think if you bought the RTYs, how much money you could have made, since the 15 to 30 and the 60-minute time frames were all in buy mode. Okay. Does anybody have any questions? I'll be back here. I don't know, the day before. I don't think we're New Year's Eve. I don't know if we're open all day or not. But if we are open all day, I'll see you Tuesday. And of course, I'll be back on Thursday to Back to the Futures. But if we do have a half a day, I'm not sure. You know what? I've been in this game so long, they keep changing everything. Let's just see. New York Stock Exchange holiday, 2024 hours. Trading hours, let's see. Juneteenth, Independence. Should be here. Christmas Day, Friday, December 25th. Doesn't. Oh, I don't see anything for New Year's Eve. So I guess it's a full day. If that's the case, I'll see you here next Tuesday at 1. Let's see. I don't see anything here. New Year's Day. What was New Year's Day? New Year's Day, we're closed. Okay. Doesn't look like we're okay. I don't think so. I think we got a full day in store. So if that's the case, I'll see you here next Tuesday at 1:30, and then obviously again Thursday. I hope everybody had a great Christmas and a happy Hanukkah. What else is going on here right now? Okay, QBTS going, QBR. Look at this INOQ. Go. All right. Does anybody have any other questions here at all? None? It's so... Oh, 4 p.m. All right, there it is. All right. So obviously thank you for doing that. Obviously there is no, I'll see you Tuesday at 1:30. And again, I'm really happy for that. S&P's pulling in here now. Let's see if we get this pullback on the 5-minute time frame to get some type of a long here. Okay. All right. Does anybody have any questions at all? None? If you want to give me a call, if you want to text me or call me at any time, my number is 914-500-7484. Like I said, it's really important to ask, to learn, and to be able to understand the markets the way I'm teaching them, but more so, be consistent, learn from me. I got 41 years of experience, and I hope to see you here. My legacy depends on your success. So have a great day, everybody. God bless. God bless the United States. And have a great weekend. And I'll see you here on Tuesday at Back to the Futures.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.